It's Tuesday and you're watching FreightWaves Now. I'm your host, Anthony Smith, and coming up, we're going to have Michael Vincent giving us a shipper update. But first, we're going to go to Zach Strickland with Carrier Update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Carrier Update presented by PowerFleet. I'm Zach Strickland. So, looking at the freight markets today in terms of volumes, outbound tender volumes, and tender rejection rates. Tender rejection rates there in that blue line there at 26.49%, increasing for the third consecutive day now after hovering out there at the end of September, trending up quickly. We're going to break that down here in a second, but looking at volumes, we see that volumes themselves not going up. So, basically this is not a demand-driven, or as much of a demand-driven, event as it would have been in the past, where you see a lot of correlation between the volumes and the tender rejection rate here in the past. The fact that volumes are staying down does somewhat lead me to think that this is not going to be a sustainable increase for a longer period of time, like we saw in the past. We saw this tender rejection rate there at the beginning of August fall down. Volumes continued to rise, keeping that pressure on that tender rejection rate and making it more difficult for carriers to really, maintain their networks throughout. So this one moving the opposite direction in October. We thought that this would happen in the early part of October, where we saw a little bit of a decline in overall volumes to start the month. This is a seasonal impact, but again, volumes are still well over where they were this time last year. And tender rejection rates, of course, continuing to increase there. Now let's break down the tender rejection rate real quick. Looking at our van, reefer, and flatbed rejection rate broken out here into three segments. You see the van rate, which compromises about, accounts for about 70% of the overall volumes of the tender volume index. And then you have reefer, again, about 15% or so, give or take, given the market. And then flatbed out there occupying roughly about 5% of the overall volume in here. So not as big of a sample there, but regardless, it does tend to be a little bit more indicative of what's going on in the industrial economy. Some of the lumber movements, etc. Flatbed really been flat throughout this whole environment of COVID. Not the most volatile, even though that is very non-traditional. Looking at the reefer here over the last few days, you can see that the reefer rejection rate continues to rise significantly, somewhat out of season, but not really, especially in areas of like the Northwest. It's not necessarily your West Coast reefer volumes or that produce season reefer rejection, reefer capacity, or thing that's impacting reefer capacity as much. This is now going to be, more traditional refrigerated movements for food supplies, etc., more processed, manufactured type stuff. And that is really what's driving that rejection rate up, is the reefer rejection rate here. Van is going up, ticking up a little bit itself at almost 26% right now. But yeah, that reefer rejection rate really breaking things off right now for the national capacity situation. So let's look at the WRI, our weighted rejection index, real fast. Let's see if we can identify where some of the tightest areas week over week, what's driving that national capacity to its tightest levels of the year so far. Looking at the blue on the map, you can see Harrisburg back in the blue again, along with Allentown, Little Rock, Salt Lake City. Some of these markets scattered throughout the middle sections of the country. Really one of the more, this has been kind of an overlooked section of the country there in the middle. As some of these smaller markets and Midwestern markets have really started to take off. Little Rock, weighted rejection index value of 9. Real strong increase week over week. Allentown, Harrisburg, Salt Lake City, all showing increases along with Denver. Stockton, consummate backhaul market there in the red-orange color there, showing to be a little bit more stable. Looking at these markets kind of broken out here. I got a van rejection rate for Allentown, 36.6%. Kind of middling, but looking up there in the purple, we see that reefer rejection rate for Allentown shooting up, along with Little Rock reefer rejection rates shooting up as well, and Salt Lake City reefer capacity still being, driving higher throughout that, Mountain West, Northwestern, what we call produce season for that section of the country. So again, any of these markets for reefer carriers today, probably strong environments for spot freight, and that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi, welcome to the Shipper Update. I'm Mike Vincent. Let's jump into it. Zach was talking outbound tender volume index in the blue for this year at 15,433, flattening out a little bit after a bump last week and then a drop a little bit, but has flattened out. As you can see, it is still well above the last 2 years. So outbound tender volumes from shippers continue to put pressure on capacity. If we move forward here and look at the length of haul, we talked about this last week a little bit, and you can see that there's a drop in the long haul here in the green, and your tweeners in the orange has dropped off. But then you get into the mid-level and the shorter hauls, and you start to see it flatten and tick up. And we talked about how you can watch those rises, that kind of ripple effect. Now, when you're using sonar, you can look into this and look into those different lanes that affect your particular market if you're a shipper, and see where those pressures are coming and where those ripple effects are coming from the long haul, inbound and outbound of your particular market, to see how it's going to affect those middle and short haul moves to help you plan out your capacity. If we look at outbound tender rejections, we're sitting at 26.49, which is incredibly high and much higher than before. Now, we talked about the flattening of the outbound volumes, or the number of loads. That's still extremely high and continues to put pressure. There's no downward pressure on these rates there, although we wouldn't expect that outbound tender rejections would continue to increase until we see those volumes increase as well. Moving forward here, the outbound tender rejects for the different modes. Reefer, excuse me. Reefer is absolutely driving the way here at 45.87. But the van index is just below that 26. That 26.49 is all of them, the composite. But underneath that is a 25.92 is where the van rejection rate. So just over a quarter of all van tenders are being rejected right now. So there are some pretty high pressures. Moving forward here to the outbound tender volume index versus OTRI. The blue is your outbound tender volume, and the height is your rejection rate. You can see Harrisburg, Allentown, even Columbus, Indianapolis, Houston, Dallas, Fort Worth area, and the Inland Empire and LAX still playing a heavy role in this. But as I mentioned here in the Houston, you've got Little Rock or Memphis, and you've got Indianapolis, Atlanta, the center of the country, and even Chicago getting in the game here with outbound tender volumes and a rise in those outbound tender rejects. Now, looking at some of the causes here, what I've got here is your imports into the port cities in the color, and the height of the markets is the actual outbound tender volumes. And you can see this ripple effect where LAX is extremely blue with these imports still coming in there, putting heavy pressure and high volumes out of the Inland Empire, which is here in the gray. On the East Coast here, you can see Elizabeth, dark blue with the imports still putting heavy pressure on there, and then flowing into Harrisburg, which is that tall gray column there, the Harrisburg market, which is really high with volumes and putting the large strain and pulling in capacity from around it, its surrounding neighbors. Also Savannah, very dark blue still. If we move forward here, Harrisburg, outbound volumes in the blue, very high, pulling those outbound tender rejects up. If we look into Little Rock, we see outbound tender volumes spiking, the blue, and your inbound, you see that gator, that separation between those two. What that does is that puts heavy pressure on that capacity. When you start seeing an outbound volume really start to increase over the inbound, or even inbound start to drop relative to outbound, puts that pressure on there. That'll do it for your shipper update. I'm Mike Vincent. Thank you.
And that's going to do it for this Tuesday edition of FreightWaves Now. Thanks so much for tuning in. As always, you can check out all of our content on your favorite streaming platforms, including Apple TV. Thanks so much for tuning in, and we'll see you on the next episode.